Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, July 16th, 2019. Hope everybody's doing well. We are now in the final hour of the trading day. As I mention every day, I believe that the prices that are as close to the close as possible are the most valid prices of the day. That's when the large institutions, financial institutions, the market makers come into the market and take control of the prices, and I want to be with that group, not with the amateurs during the day. So I believe they're the most valid prices of the day, and therefore those are the prices that I'm going to make my buying and selling decisions from. So, well, we've had kind of a little bit of a crazy market. We were down earlier, now the Dow's up, so we're basically flat, although the NASDAQ is down much more than the rest of the market. So let me just take a look and make sure everyone can hear me. Looks like, hi Andy, how you doing? Andy says, hi Greg, I'm ready for some action today, but patient as always. Yeah, that's a good way to put it, Andy. We do want action, but we do want to be patient, and I would err on the patient side over the action side as a general rule of thumb. Hey Frederick, how you doing? Good to see you. I just saw your email. I'll take a look at that probably after the market closes, okay? Hey William, how you doing? I am doing fine. I'm doing fine, William. Thank you for coming as always. I hope you guys are all doing well. All right. Well, listen, so the plan for today, the format for today is, first of all, we're going to run the U.S. legal disclaimer. We're going to come back. We're going to take a look at all my positions. We're going to talk about when I bought them, talk about why I bought them, and then how I'm going to manage them going forward. And then we're going to do just a little trader psychology because, as I mention every day, I really, truly, and honestly believe that in order to be a successful, profitable trader, you have to get your psychology together. You cannot, just like Andy was saying, want some action, but you've got to temper that with patience. I mean, it's the most important part of trading. I know I say it every day, and I hope you guys, I know you're listening to me, but I hope you're hearing me, because you really have to have that together if you're going to make this work. If you really have any chance of making it work, just think of, each trade as one of the next 1,000 trades. Don't put too much energy into it. Always position size correctly. And if you lose, just don't sweat it. Just get on with your life. But if you take that mindset of this is one of 1,000 trades, and I have an edge in my trading, so eventually that edge is going to reveal itself. That's how you should look at the market. Not like, man, I have to make this much money before the end of the month because I have to pay for this or that. I promise you it won't work. I promise you it will not work. So just make it a process. Just make it a process that you do every day. Don't get too down on the down days. Don't get too up on the up days. Just, like you're a blackjack dealer in Vegas. Do you think they put a lot of energy into each hand they deal? They don't. They just deal. They don't, they're just flatlined. And honestly, it's some of the best advice I could give everybody. Look at every trade as the next one of just the next 1,000 trades. Position size correctly. Position size to where it makes a difference, but it's not going to hurt you if you're wrong. So I know I sound like a broken record to everybody, but I'm here to share my knowledge of trading, and this is the most important part. Honestly, the psychology and the emotions are the most important part. So where was I? Oh, okay. So after that, we're going to come back. We're going to take a look at all my, we're going to go through my watch list. We're going to go through each stock, and we're going to look at the support, resistance levels, the technical levels, RSI, MACD, ATR channels, look for V1s, V2s, and see if there's anything for us today that might look interesting for us to buy. Sound good? So, all right. Hey, JT is here. Good to see you, JT. Man, I really appreciate you coming. Nice to see you. Frederick says, okay, thanks very much for your time on the live. Hey, you bet, Frederick. Chris F is here. Hey, how you doing, Chris? Nice to see you. And Mount Doji. How's it going, Mount Doji? Hope you're doing well. Hope you're doing well. So, all right, well, let's get over to the legal disclaimer, get that out of the way, and I'll be back in about 40 seconds. So hang tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Well, let's get down to it. First, our first position is AGQ. We did buy AGQ back here on the 10th of July. Why did we buy it? We bought it because of a back-tested approach, verifiable, profitable back-tested approach, which is going long when the 5 EMA crosses over the 20 EMA. That was our entry signal. Now, obviously this doesn't work every time, but if you're wrong small, and if you're right, you can be right big, and that's the key to profitable trading. Your winners have to be larger than your losers. It doesn't matter what your winning percentage is. It matters at the ratio of how much you win compared to how much you lose. So we did buy this with the 520 cross on July 10th. It immediately went against us, and I thought, oh boy, it's not looking, it's not a good start. Next day rallied back up, and you can see yesterday we had a really nice day. Today we've had a really great day. We hit 3 profit targets. We did break out of this high, so this is looking really good right now. I think I took 2 profit targets yesterday, 3 today. So I am out of about 50% of this position, which is a really good place to be. You know what I mean? So you're kind of playing with house money right now. I will stay long. This is a mechanical trading approach. I'm going to trade this mechanically like a robot trading until the 5 crosses back under the 20 EMA. If it continues up, I'll continue to phase, and I may just run out of shares, and that will be the end of the trade, or I will exit when the 5 closes back below the 20. But this is a really great trade. I mean, at its high today, I think it was up over 4%. And this is double leverage. But I did take a full position. Full position in a double leverage means a half position because it's double leverage, so it was a full position. But as you can see, we hit the 3 profit targets. We did hit one closer to the top here. It has come back out, and that's one of the reasons I like phasing, is that sometimes you'll get these big bars up, you'll hit a couple profit targets, and then even if it reverses, you've locked in those gains up there. So this is a paint by the numbers trade, very easy. I'm either just going to stay in this trade as long as the 5 is above the 20, and if it continues to move up, I will phase out. And when the 5 eventually, because it will eventually close back under the 20, that will be my exit on the rest of the shares. But let's hope this keeps going up and I just phase out and phase out and phase out. So this has been a really, really, really nice trade today. All right. Hey, Scott Montgomery's here. How you doing? When you're taking your profit targets, are those trades done intraday? Yes, they are. But Scott, I enter those trades in the evening before. They're limit orders in the evening before, so I don't have to worry about them. They're just in there. So you know, I have 4 videos that's in the description of this video, this live stream, down below in the description, and one of those videos is how I figure out my profit targets, like how far above the next day am I going to place my profit targets and how many shares I'm going to sell. So if you haven't watched that video, you might want to, because it's specifically just about that. But yeah, at nighttime I enter in all my limit orders, and then I don't have to do anything. during the day, right? Until the end of the day. Hey, Steve Burns. Steve Burns, man. So glad to have him here. It's always an honor, Steve. I know Steve took this AGQ trade. I know that because I watch his 3-time-a-week live video newsletter. No, not live, but video newsletter where he analyzes the markets, talks about what trades he's going to pick, and AGQ was definitely one of those. So how you doing, Steve? Good to see you. Hey, stick around. I'm going to do a little trader psychology on one of your posts today. But yeah, I'm loving this AGQ trade as well. Scott Montgomery. Yep. Just in there. Roger that. Okay, good. Steve Burns. Good old 520-day EMA crossover. Yeah, we've done pretty well, Steve, haven't we, on the recent gold trade and on the recent silver trade. Interesting, though, gold's not up today. It's kind of a disconnect, right? All right. So that's silver. That's silver. All right. Etsy. All right. So silver was a good trade. Etsy, not so hot. I did take Etsy again when the 10 crossed over the 50 SMA. This is a good back-tested approach. It is shown to show an edge so far for as long as Etsy's been public. This is not a mechanical trade for me. This is a discretionary trade. I just used the 10-50 crossover as my entry. So going forward, I don't like the price action which has happened today. If this closes above the 50-day moving average, I will hold it. If it closes under the 50-day moving average and at the same time closing under the 50 RSI, I'm going to go ahead, just take my lumps. Not too bad, but still a 2% position, right? I mean, we made it up over on the AGQ, luckily. But I just don't like the action here. We've made a lower high. Looks like we're making a lower low. Currently, where the close is right now, the current price is under the previous day's low. You know, there's not a right or wrong answer with this because this is a discretionary trade. On the bright side, it did wash out the previous low, and it looks like it's barely above that as well. MACD is positive. But, you know, I'm a stickler when it comes to losses, you know, and this was a loss right off the bat. It's not a good sign. So most likely, unless this closes above the 50 RSI and above the 50-day moving average, I'm going to go ahead, just call it a losing trade, pull this weed out of my garden, and let my other flowers that are in the portfolio, I'll keep those, and hopefully they'll grow a little bit. But right now, this is pretty weedy right here. So not 100% for sure. Let's just see where it is. It is off of its low, but you know, this is a good back-tested approach. But just because it's a good back-tested approach, it does not mean that it's always going to work. So that's the plan with Etsy. So my puppy's over there throwing a fit. Cooey, come here. Calm down, hon. Sorry. So anyway, so that's the plan with Etsy. I am going to just go ahead, lock in this loss. Didn't go my way if it closes under the 50-day moving average, and it also closes under the 50. So that's the plan there. All right, IWM. I did buy IWM. This is a mechanical approach. This is a robot trade. This is based upon the 10-50 EMA cross, just like we had on Etsy. And this does back test well as well. And so if you were trading this totally mechanically like I am, I'm going to stay in this trade as long as the 10 SMA is above the 50 SMA. We did buy it here back on June 28th. It immediately gapped up nicely. I did take a couple profit targets. I have taken some other profit targets when it's rallied, but has really been stuck in this range here. You know, you can see our entry price here is 155.88. We're at 155.53, so down about 30 cents on the trade. But I am up on the trade because of the profit targets I hit at higher points. You can see we did hit one profit target today, literally within a couple pennies of the top today, so that's good. So we'll see what happens, but this is a mechanical trade. I'm just going to hold through this. And the reason that I do have some mechanical trades is because sometimes, when you're a discretionary trader, you'll have a nice run up, you'll have a bar reverse strongly on you, you'll get out, and then it just keeps on going. And sometimes you'll get into these markets where things just keep on going. And if you were a discretionary trader only, you will have missed out on some of those moves just by the fact that those big moves have sell-offs, and that would be your trigger or your filter to get out of the trade. So I do like to use 4 different types of trading approaches. 1, mechanical trades in case we do get into a nice long-term move. Likely I won't be in some of those moves as a discretionary trader, but I will be in those as a mechanical trend follower. Then I have my discretionary, and that works out better when you have swinging markets, ups and downs and ups and downs. That's when a discretionary trader will outperform a trend trader. And then I like to sell puts for income. And then also, of course, we have our overnight SPY approach. So those are the 4 approaches that I use. So glad that we hit one profit target here on IWM, but I'm staying in this as long as the 10 stays above the 50 on a closing basis. All right, so that's that. All right, here's our famous SPY trade. So I did buy this yesterday at the close at 300.75. Today I sold it. It was so close I couldn't even put the line in there. I think I lost like 11 cents on the trade. That was it. But I'm glad that I got out when I did, right? Because now we are lower than that. So just in case we have some new viewers, let me take you through this quickly. But this is from Liz Ann Saunders at Bespoke Invest on Twitter. It's a good Twitter channel in case you'd like to go visit. They have some good information. But if you would have bought the SPY each day at the open in the morning and sold it each day at the close in the afternoon since 1993, you'd have actually returned a negative 13.9% return. But if you did the opposite and you bought the SPY at the close each day and you sold it at the open the next morning, if you did that every day since 1993, you would have actually returned 634.2%, meaning more than all performance in the SPY since 1993 has come from people bidding it up in the aftermarket, bidding it up in the pre-market the next day, and then selling it into the open. And we know the market has gone up since 1993, right? But this shows you that it happened in after hour and pre-market. So the blue line here, this is the buying in the afternoon, selling in the next morning, 634.2% return. The orange line here is if you would have bought it in the morning and sold it during the day. You can see the movement does not come during the day. It comes from after hours. And this was done up until January of 19. Steve Burns did a more recent study up about a couple weeks ago where the buy at the close, sell in the morning the next day actually returned 712.63%. So this is why I do buy the SPY, a 10% position size each day at the close, sell it first thing in the morning, and I repeat and repeat and repeat every day, and it has worked out really, really well for me since I've been using this. But notice the charts. We have years and years and years of ups, and then we have years and years and years of downs, and then years of ups, years of downs, tons of years up, down, up. So it doesn't work all the time. There are going to be drawdowns. So it is really seriously important that you take a small position size. Let these numbers work for you. Let these results work for you, but you can't do it if you're going to take huge position size, because who knows, we might go down starting tomorrow for the next year, right? So, don't bet too much. Small position size, 5% position size, 10% position size. So I will be buying this again today at the close and selling it first thing in the morning. Steve says, I will be here. Oh, good. Thank you, Steve. Mount Doji says, I blame Amazon Prime Day for Etsy. Yeah, let's blame Amazon. I don't know. Yeah, Etsy. I woke up and looked at that one. Oy vey. Not so hot tamale on Etsy, but luckily we had AGQ on the other side of that. Shalin Dewan, hey, how you doing? Oh, he says, Steve, any promo code available for your newsletter? I don't know about that. Steve would know about that, so maybe he can let you know. But it's nice to see you, Shalin Dewan. Appreciate you coming. Nice to see you. Dr. Jorgensen says, no easy money sleeping last night. SPY was even. Yeah, pretty much even. I think we lost 11 cents on the trade. That was it. But all in all, not too bad. We've done pretty well. Okay, so what else do we have? We have Verizon. We did buy Verizon back on the 12th of July. And why did I buy it? So I bought it. We made this high. We came back down. But the reason I bought this was because you see this bar here, moved back above. The next day went up high and then reversed. That's a negative price action. That's actually a V1 to the downside. This washed out the previous day, closed below. This is a very negative action. But if you have a negative action that's immediately followed by a real positive action, that's a good sign because the market didn't want to go down. So here you have this high. We take out this high and reverse, but the next day was strong enough to close above that high. That's why it painted this little orange triangle. This is called a fake out bar. And these, in my experience, tend to work well. So we did buy it here at 57.19 on the 12th. Next day, it immediately moved nicely for us. I think we hit one profit target. Yeah, I think it was one profit target. So going forward here, I like how the bands move sidewards and now they're starting to fan out, which means it's going our way. So my initial profit target up here is going to be the 70 RSI up here. But this orange line here, this is the previous high. So if we get up there and reject that orange line, we reject the previous high, I'm going to go ahead and just lock in my profits. If it goes above, closes above, I'll keep it and I'll see how it reacts with the 70 RSI. If it tests the 70 RSI, comes back down, then I'll go ahead and I'll get out of it. Conversely, where are we going to take a look at possibly exiting this to the downside? Well, we just bought it a couple days ago. It's extended from our entry, but not probably enough for me to, this is a tough one. Yeah, this is a tough one. I mean, I guess it has extended at least one ATR. At this point, I'll just have to see what the price action is, but either a close below the 5, possibly a close below the 10. I'm leaning more to a close below the 5-day. If we move up another day and we have another nice day up, then I will start to use a close below the previous day's low. Like tomorrow, if we close below today's low, that might be a reason to go ahead and just lock in the profits that we have. It's kind of hard to say because you kind of have to look at the day that it happens and you kind of have to look at the price action of what's going on that day. But hopefully that won't happen and we'll just continue up. So this has been a good, nice, profitable trade so far. It is slightly positive today, so we'll see what happens going forward. Merck. So that's the extent of the current stock positions I have. I did sell a put down here on Merck at $75 that expires on the 26th of July. And I just want to show you real quickly. When I sell a put, I pick a price based upon a price that has some support in multiple time frames, right? So here on the monthly, the $75, it has the one ATR channel below it. So, not a really strong signal, but there should be some support here at the one ATR channel because we're above it. That's going to act as some kind of support. On the weekly, the price lines up when I sold it. It lined up with the 50-week moving average. Now it's moving up still, so but that's fine because that should have support at a higher level. But when I sold the put, I did like that on the monthly it lined up with the 1 ATR channel. It was above the 1 ATR channel. On the weekly, I like that the 50-week moving average lined up with that $75 price. And on the daily, I like that the $75 price had some support of the 250 right below, and the $75 price lined up with about a 30 RSI. So, I have 3 different potential technical support levels at that $75 price. So, actually, I'm almost 80% right now of the premium that I'm going to get. When you sell premium, you get a certain amount of premium. I've got 80% of that premium, and I have a limit order in right now to lock that in, because even the best situation that could happen, I wait 2 weeks and I get that last 20%. So I'd rather, now that I've got the lion's share of the premium, I'd like to get out of that and get onto another trade that has a little more meat on the bone. So that is that. So AGQ 520 cross, doing very nicely. Etsy, we took the 1050 cross. As is right now, it's poking its head back above the 50 moving average. So, and it's a 49.26. So this one will be kind of a game time decision whether or not I keep this or just let this one go. IWM 1050 cross. Don't think we're going to be doing anything with that today. And then SPY, we're going to be buying this at the end of the day with the overnight SPY trade. VIX is looking kind of interesting. Well, I'll get there after. And then Verizon, this is fine, no problems here. So that's what we have. So let me quickly Frederick says, more and more people on your channels. Good job, Greg. Oh, thank you, Frederick. Yeah, it's nice to have more and more people here. And thanks to everybody that's, helped me grow this and share this, and really appreciative of that. Chris F., are you opening your short put positions intraday or waiting to just before the close as well? That's a good question, Chris. I usually do my puts kind of during the day before the end, because I really don't have enough time while I'm doing the live stream, and I don't want to just sell the puts at the bid. I want to put limit orders in and see if I can get the ask price and get a little bit more premium. So basically on the puts, I sell those intraday because there's just too many things to do at the end of the day, and you don't have to be as precise on selling the puts as you do with entering your stock positions. All right. So, this is from Steve Burns, our friend Steve Burns, at @SJosephBurns on Twitter. So if you guys have not been to his channel, please seriously do yourself a favor. Go subscribe to his channel. He has such great posts every day. Make a commitment, read his post every day for a week, and I promise you there is no possible way you're not going to be a better trader if you do that. But Steve posts here, the stock market is the device for transferring money from the impatient to the patient, Warren Buffett. And isn't that true? I mean, think of it, it's a device that transfers money from the impatient to the patient. So, in real terms, what does that mean? Well, I always talk about being patient, right? I always talk about waiting for the stocks to come to you, waiting for the setup to come to you, being patient. And that's what he's talking about here. The people that are impatient, the people that are buying at any possible level because they read something on the news or they saw something on CNBC or, remember all these high prices. When you have these high prices like we have right now, the third ATR channels, a lot of the stocks, there's a lot of positive news. People feel good. It feels good to buy. Well, if you look back when everyone's super bullish, you're generally near the top of the market. When you look at the bottom of the market, when everyone's bearish, a lot of times that's the bottom of the market. So, Warren Buffett, I think we should listen to Warren Buffett, but the stock market is a device for transferring money from the impatient to the patient. And, I studied one-on-one with Dr. Alexander Elder. And when I was with him in Vermont, he told me, he said, Greg, do you know what our purpose is as what our purpose as traders is? And I said, what? He said, our purpose is to buy stocks from people when they are very depressive. And our other purpose is to sell stocks to people when they're really manic and really, jubilant and just crazy want to buy. So essentially, buying stuff from people that are depressed, selling stuff to people that are all excited. So this ties back into this, impatient. The stock market is a device for transferring money from the impatient to the patient. So, that's why I like to buy dips, because you are generally buying from people that are just getting out of a position and saying, screw it. Right? I mean, we do buy stuff when it's going up too. That's a little different thing. But anyway, I thought this was good. And then while we're on the subject with Steve, Steve did post this. This is on his Twitter channel, S. Joseph Burns. These are all of his trading books that he's read. And, you can get all of these on Amazon. You can look at this here on his Twitter channel. But New Trader, Rich Trader, New Trader, Rich Trader 2, these are nonfiction. These are actually, these are actually fiction books. These are stories about trading. So they're really good. I've read this one, Moving Averages 101. This is one of my favorite books, Buy Sell Signals. I've read this book, Trading Habits. I've read this book. I don't think I've read this book, Steve, sorry. 5 Moving Averages that Beat, Buy, and Hold. That's a great book. Trading Booms and Bust. I haven't read that one. Investing Habits. Options, read that one. So You Want to Be a Trader. Haven't read that one. And Calm Trader. So, if you want to improve yourself as a trader, read Steve's books. Seriously, read his books. Probably my favorite one, and it's really crafted how I trade. A large portion of how I trade is this one, Moving Averages 101. So anyway, just wanted to show everybody this. He's a great author, and these books have a lot of wisdom in them. All right. Well, let's get back to the topic at hand, and let's go through the watch list today and see if there's anything that looks interesting to us. All right, so Apple. Well, there's really nothing interesting for me on Apple here. We're at a 62 RSI. We're a little too high. For me, I like to buy in the 50-60 range. We've had some issues with this previous high here, so nothing on Apple for me today. Silver, of course, we have silver. This has been a good trade. So nothing there because we already have it. Advanced micro devices. Nothing there today. I don't like the action here where we took out this previous high. We were above the third ATR channel. We've closed back into the channel, the V1 to the downside. So, it looks a little bearish to me. I'm not going to short it, but I do want to point out, see all the green triangles? This means this bar here went higher, next day closed above. That was a good trigger. Same here, same here. So it's painting one for today. I don't know if it will trigger for tomorrow. So nothing on advanced micro devices. Amazon, nothing really there. We're at a 68 RSI. It's a little too high. It looks like we possibly might close with back under the third ATR channel, which is not bullish, because about 90% of prices stay below the third ATR channel and above the negative third ATR channel. So most of the time stocks hang out in this area. And when you get up here, it's a bit of an extreme. When you get down here, it's a bit of an extreme. Doesn't mean that just because it's over the third ATR channel, it can't go higher. It certainly can. But being that we lost the third ATR channel today, at least right now, that's not particularly bullish. So nothing on Amazon. Boeing. All right. Well, it's possible on something today. I did buy Boeing back here on the 12th of June when we had this nice strong close above the 200-day. I took a half position because we came from a lower low up. I'd rather take a higher low position. I did buy a half position here. Next day, yesterday, closed barely under, and I had to get out for a small loss on a half position. Now, today we're back above the 200, which, gives us the question, well, do I want to rebuy this again now that it's back above the 200? MACD went positive. I think I'm just going to have to look and see what happens and see at the close of the day. If this closed less than halfway of this entire bar, that's going to be even more bearish. So I'm going to go ahead and just kind of put this on the list and see. Let's see. The other option on Boeing is if today we did not take out that high, so this will now be a fractal. The other option will be to see whether or not we can actually create a fractal to the upside tomorrow if we go above today's high. So I am going to mark Boeing. I wouldn't call it an A trade in any way, shape, or form, but I do like that it's back above the 200, and I do like that the MACD has gone positive. Volume's not that high, so we'll watch that one. Alibaba. Well, nothing really there. We're outside of the 1 and -1 ATR channels. That's the green right here. We did make a higher high. We came back into value. I was kind of looking for a trade there. This would have been obviously the place to buy it, but here's day 1, day 2, day 3, day 2 washes out day 1, day 3, closes above day 1, but this bar was too big and it gapped, which makes for a subpar V1. But it did go up from there, but so nothing on Alibaba today. Caterpillar up near the third ATR channel. Again, we made this nice high. We came back into the value zone. I was looking for a trigger here. We were in the right zone, but we didn't have a buy signal, so I didn't get any of that. DDM, it's just, kind of hanging out here at these elevated levels. It's still parabolic, meaning that it's over 74 RSI. But this brings to mind the Warren Buffett thing, the impatient, transferring from the impatient to the patient. I want to be patient. I want to see this come back down into the value zone for me to possibly re-enter. We were patient back here when we bought this back on June 6th, when we had the previous day we closed under the 200, then we closed back over the 200. This gives me a good risk to reward ratio with the 200 support underneath me. Did I know it was going to go this high? I certainly didn't, but what I did know is that if it closed under the 200 day, I was going to go ahead and just take a small loss. But if it went my way, I was going to be patient with it, and we phased out, moved sideways, phased out. I sold about here when we lost the 70 RSI, but that was a monster trade on a double leveraged ETF. So, I just want to be patient. I know the stock market's making new highs and people want to get in. They don't want to be left out, but try to walk away from that. Try to get outside yourself and look and go, is this pretty high extended? It is. I think probably the better move is to wait for a pullback to buy. All right, Disney. Well, we have made a higher high, but just like I said before, we're at a 65 RSI. It's not a good risk to reward ratio. I want to see this come back into the value zone in between the 1 and the -1 ATR channels. Ideally, I'd love to have a V1, V2 that rejects the 20-day moving average and then goes back up, forms the V1, V2 over the 20 average in the value zone, right? That's where you get the best moves, or in the middle of the value zone up to the third ATR channel. From the middle of the ATR zone down to the negative third ATR channel. Just like we had this trade back here on June 3rd, we had this V2. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. Day 2 closes above day 1, and we had this nice trade up here that we phased out of. Etsy. Well. It's back above the 50, so this will have to be this will have to be a game time decision. We'll watch that at the end of the day. Facebook has just been hanging onto this third ATR channel, 69.49 RSI. It looks like it was above 70 earlier, so I'm not going to do anything with Facebook here. Again, I want to wait for a pullback. 5 below did bounce off the 200-day moving average, which is good. I don't like this bar in front of it, so nothing on 5 below. Gold, interesting today that silver's up so high in gold, but you see how we made this pennant, inside bar, inside bar, inside bar, and now we finally broke out of that pennant to the downside. Sometimes that happens and it reverses back up, but what I would really be looking for here now is, now that we're back in the value zone, I'd like to see these bars not be too big, less than 1 ATR, kind of find some support for a couple days, then have a V1, V2 back up, and maybe we go back up and test that high. I don't know, but it is getting into the zone. But just because it's in the zone does not mean you take it. It gets into the zone, then you have to have some kind of trigger in order to trigger you back into the trade. Google having a nice day. I did buy Google here with a 1030 cross. Next day I got out with a small 1-day gain. Next day it closed back above the 200. I did buy it and then immediately got me back out. Next day it did not close above the 200, so I didn't get back in. And then I did not get back into this trade, although that would have been a good trade. So those of you holding Google, GOOGL, congratulations. So that's a nice move up there today. Goldman Sachs did have earnings today. I guess they did beat earnings. So this is moving up nicely. Just too high to buy here, 71.22 above the third ATR channel. Again, I needed to pull back. We had this nice trade back here on the 27th of June when we closed back above the 200, giving us a good risk to reward ratio. If it closed back under, we also triggered this fractal. And we had a beautiful about 3.5% 2-day trade. Can't remember exactly what the numbers were, but you know, again, it's about setups that give you a good risk to reward ratio at a reasonable level, and this one worked out really nice. IBB having some problems there today. Did hold the 50, but nothing there. Intel looks like it had a big move back down today, didn't it? It was getting a little pricey up there. You know, if we came back down, tested the 200, and then went under and then back over, might be interested, but nothing there today. IWM, we have that. Johnson & Johnson. You know, this is interesting. I'm not going to buy this, but it did test the 30 RSI intraday, but I just don't like this massive sell-off here. So I am going to be watching this in the future. I'd like to see this move sidewards a little bit, then spike down, go under the 30, then back over. That might be an entry point. Coca-Cola. You know, Coca-Cola does not look so hot tamale here, and I'll tell you why. Here we make these highs with this strong MACD, and strong MACD indicates strong momentum. Then we came back down. Then we made a higher high with a lot less momentum. So it started to run out of momentum. Then we came back down. Then we made a higher high with actually no green bars, no momentum. So this is what Dr. Elder calls a double top, or a triple top in this case, with a bearish divergence. It's running out of momentum, and you know, if things can't go up anymore, they're running out of momentum, then there's, you know, likelihood they're going to go down. So today, you see this V1, here's day 1, we wash out day 1 to the upside, we come back down. So I'm considering taking a half position short today in Coca-Cola because of the previous bearish higher high tops with the bearish divergences on the momentum. You know, the setups there, but there was no trigger to get short. Well, the trigger may be here today if we close under yesterday's low. So, because this is a V1, right? It did wash it out, did test these new areas, and then failed. So this is a potential. We'll watch that at the end of the day. Lockheed Martin, up, move up news. Well, look here. Now we're coming back into the value zone, right? Let's be patient, see what happens. Ideally, I'd like to see this come back down, kind of move sideways, get a nice V1, V2 in the value zone. But nothing today. Here's an example. Like, look here, right? We're here. We're coming back into the value zone. Just like here, we were above the value zone. We waited to come back in the value zone. We had this really nice V1 entry here. And look at that little monster. Right up there. We faced all the way up to there. So that's what I'm looking to do again on Lockheed. MasterCard. Well, we've lost the third ATR channel. Looks like we lost the 70 RSI. That's not extremely bullish. That's actually bearish. Nothing here today. In order for me to get long again, I'd have to, again, I sound like a broken record, but back into the value zone. We took this short here when we lost the 70. We were above the third ATR channel, above the 70, closed below both of them. That was a nice short. But as it got back into the value zone, like I keep talking about, then look, we had a nice V2. Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. And we had immediately had a nice move, sold about 50% up here, and then got out of the rest here. But that was still a nice trade. We came back into the value zone, but there was no trigger to get me back in, unfortunately. Merck, we talked about Merck. We have a put with Merck. Microsoft did sell off a bit today, didn't it? But on the plus side, it was too high to buy up here. Now we're back into the value zone. So let's see if this can settle down, have the bars narrow, get a V1, V2 entry back to the long side. So it's in the zone, but just no trigger. Netflix, again, goes above value, back into the value zone. But we have earnings tomorrow, so I'm not going to get in front of earnings, but there's no trigger there anyway. Nike. Above value, high levels. Again, with the rest of the market, I want to see this come back into the value zone. Look for a V1, V2 trigger. Philip Morris, I did buy. There is nothing today. This was a little bit of a mix-up yesterday, but I did buy Philip Morris back here on the 10th of June. The previous day we closed under the 200, then back over the 200, and we also had this nice V2. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 not only closes back above the 200, but it also triggers the V2. So there's a combination of two entry signals, and you can see worked out really nice. Moved strongly the next day, phased out a little bit, moved up again, phased out a little bit. I did actually get out of Philip Morris yesterday because up until about 1 minute to go, it was under the previous day's low, which was my exit stop because it had moved and extended far away. But in that last minute, it rallied, and I got out when I shouldn't have. But not a big deal. I mean, it's only up 11 cents today, but still, it was a nice profit that we locked in. But I'm not going to re-enter at these levels. PayPal did get sold into today at these high levels. I want to see this come back into the value zone. Look for a V1, V2 entry. Go back up just like we did here. Here we were high. Don't want to get involved here. Wait till it comes back down into the value zone. See this nice little V2 we had? Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. That was the place to buy it, right? We bought it here, rode it up into this area. Okay, Qs. Nothing on the Qs, just too high. This is an example of a close under the 200, close back over the 200, giving us a good risk to reward ratio. This was a mechanical system, and we rode this up, face, sideways, face, sideways, and got out about here. Snapchat. Well, I did app Snapchat today. We made this higher high. We're coming back into the value zone, so we might get a nice V1. Look at this. I didn't take this trade, but it's a perfect example of going above the value zone, coming back down. See this sweet V2 here? Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. Happens in the channel. Would have been a pretty sweet trade, right? SPY, going to buy that at the end of the day. Square, just too high. Have to wait for that come in the value zone. You know, talking about double bottom and divergences, here's a low, we have a rally, we have a lower low. See how shallow the bars are here compared to how deep they were here, even though we're lower. That's showing it's running out of selling momentum. So we did take this signal here. We had a V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1 into the channel, and this was a beautiful trade we took. Pro shares just too high, nothing there. Bonds, nothing there. We might take a look at this if it bounces off the 50. Tesla's had a really nice run. It's just too high. Twitter rejected that third ATR channel, back down, but nothing there. United States, natural gas, we're back in the value zone. You know, this might be potential sometime in the future, but not now. Oil having a big down day today. The dollar, nothing there. VIX. Well, VIX looked better earlier. I was considering buying it because at one point it was above the channel and it was back above the 30 RSI and a V2. But right now, as it looks like, it does not look like I'd be interested here unless it has a strong rally into the close. Verizon, went negative on us, bummer. But anyway, Verizon looks fine. That's one of our positions. XLE down today. Financials high, just like a lot of other things. Want to wait for it to come back into value. Technically, we're overvalued here. I want to see it come back into value. Real estate. Now look at real estate. You know, we made this high. We've come back down. We've moved sideways. This is what we want to look. Now in the coming days, if we had a spike down, reversal back up, V1 or V2 entry, I would go long, but nothing there today. Utilities in the value zone, but no trigger. Healthcare. You know, if this continued to move sideways, see how the bars are narrowing? See how big these bars were? Now they're starting to narrow, consolidating. You know, the longer it moves sideways, the better. But if we got a spike down, tested that down there, the market didn't like it and reversed back up and triggered a V1, V2, that would be a good entry point. So, you know, in the coming days, this might be something. And pharmaceuticals have just had that big sell-off, so nothing there. So let's take a look. Boeing. You know, this is a tough one. This is one of those ones where you're kind of hem and haw about it. MACD is positive. I don't like the volume today. I think I'm just going to wait and see if we can actually trigger a fractal. A fractal is a high with 2 lower highs to the left, 2 lower highs to the right. And right now, if it closes here, it will be a fractal potentially for tomorrow. Let's look at the weekly. Yeah, that's a tough one. I think I'm going to let it go. Etsy is going to be very close. 64.20 is going to be the 50-day moving average. Although right now it does look like it's going to close below the previous low. So we had a lower high, lower low. We are at 48.74. So we'll just watch this one. Gold, Coca-Cola. Maybe snap on another day. All right. So really the only thing I see here today is Etsy. I'm going to have to monitor that. Right now it looks a little better, but we'll see. Nothing on gold. Let's see, the close there was 52.13. Yeah. If we close under 52.13, I am going to take a short half position on Coca-Cola because of the double and the triple tops we had with the bearish divergences. And we did have this washout above yesterday's high and below. But right now, it doesn't look like it's going to be closing under. So I don't think really we are going to have anything to trade today, which is fine. I mean, days that I don't take one trade, I kind of pat myself on the back. It's not that I didn't want to trade. It's just that there really wasn't anything. And remember, Warren Buffett, right? Be patient. Be the one having the wealth transferred to you by being patient instead of transferring it to someone else by being impatient. Oh, that ding you heard, that was me getting out of my trade on Merck on the option. So that was another nice profitable option trade. Glad to have that. All right, so I am going to queue up Coca-Cola just in case it does trigger. And then Etsy. I think I'm going to let Etsy go, everybody. I think I'm going to let it go. This 50 is downward sloping. We're making a lower high. Looks like we're going to close below the previous close. We're losing the 50 RSI. So I think I'm just going to let this one go. You know, your first loss is your easiest loss, everybody. It's never fun to lose on any trade, but it's a whole lot easier to take a small loss and get on with it. You won't even think about it in a day. But if you keep it and it continues to grow into a bigger and bigger and bigger loss, then it's going to sting. It's not going to sting. It's really going to hurt. And, you know, we had our 10-50 cross. This should have worked. You know, I mean, it should have moved up. This was an immediate rejection. So I'm just going to let that one go. Take the loss on that one. And then we'll just watch Coca-Cola here. So now it does look like it's under. All right. So what do we have? We have about a minute and a half. And then if you guys have any questions after the market closes, I will get to them just as soon as this closes. So unless that closes below, I'm not going to take it. So really the only trade today is I got out of Etsy. We have 1 minute left. I'm going to buy the SPY at the close. VIX just went positive. 29.52. Well, now it's getting interesting. See the V1? But I still would need that to close above the 30. All right, so it looks like I'm going to leave Coca-Cola alone and not initiate the position. It's just too close. And then VIX, still not above the 30. Although here it goes. It looks like it is going above the 30.
Order partially filled.
All right.
Order cancelled. Order filled.
All right, so I didn't take either of them, although I do like to look at this VIX right now. I do like to look. So yeah, so actually no trades today whatsoever except for getting rid of Etsy. Oh, and then buying our SPY. So not a lot of action, which is fine. So let me take a look real quick. I know that Frederick had something he wanted me to look at. Now I'm having a problem with your chart, Frederick. Let's see. All right, let me bring up this chart, Frederick. All right. So before I get to that, before we get to questions and answers, I just do want to remind everybody that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. And, you know, I know you guys come here and you watch this during the day, and I really appreciate it, but I'm the one doing all the speaking, right? You're just watching. You know, if you book a lesson with me, you know, I'll teach you everything, but I'm the one asking the questions a lot of the time, and that way I really know if you know what I'm teaching you, if you can explain it back to me. So it does make a difference. There really is an advantage to having, you know, private one-on-one lessons with me. And so if that's of interest, please reach out to me. My email and my hourly rates are in the description of this video. And it generally just starts with a phone call, a free phone call, just to get to know each other a little bit better. And then, you know, I just want to ask you some questions about how you got into trading, what type of approach you're using, what challenges you have, and then what goals you have. And then I'll put together, you know, a customized lesson plan for you, and that's what I'll teach you to hopefully help you achieve your goals. So yeah, just reach out to me on email or actually on Twitter. That works as well. And then, you know, if you're finding this channel helpful, please do me a favor and subscribe if you haven't already, and, you know, hit the thumbs up button. It really does help me grow the channel, and you guys have been doing that, and I'm really appreciative of that, because the channel has been growing, and we're, you know, getting our approach out to more and more people out there, and I'm really grateful for that. I'm grateful to you guys for doing that, and I'm glad that we're helping people with their trading. So if you can, hit that thumbs up button. It really does help. All right, so now let's get on to some questions and answers. So just real quick, Frederick says, Greg, how are you? I'm doing well, thanks, Frederick. See how my trade is going. What do you think? Well, I can't remember exactly where you bought this. I have a feeling it was this V1 here. What's the RSI? 50 RSI still. It did move up. I don't know if you took any profits. You know, I think I would stay with this. It's moving sidewards, but if we lost this 20-day moving average, I would probably just call it. So, but hopefully took some profits up into this big move. Not sure, but it is holding support here. So as long as it's holding support, I would probably keep it. So I hope that helps, Frederick. Oh boy, let's see. Okay, so I answered that question from Chris about intraday. Yeah, I do it intraday when I sell the puts. Mount Doji says, at what point do you decide to just pull the trigger intraday? You know, Mount Doji, when I find an entry that I want to use for selling a put, I will. There's really not one particular point of the day where I say it has to be this time of the day. I basically enter the trade when I get the limit price that I want. So if I want, you know, if it's like 725 by 750, I'll just say, okay, I want to sell it at 750, and then I'll just put the order in. And sometimes I get filled at 10 in the morning. Sometimes I get filled during the live stream, just because that's where I get filled, right? So on the put, selling the puts, I don't really have a specific time. It's just when I get up, take a look, see something I like, and I'll say, okay, I like it if I get this price. Then I just put it in, and then it's just automatic. Frank, hey Frank, good to see you. Frank says, hi Greg, pleasure to be here. Question, based upon your daily purchase of the SPY, have you noticed that buying end of the month into the first of the month hold any advantage over the daily? Based on your purchase of the SPY, have you noticed that buying end of the month into the first of the month hold any advantage over the daily? No, I'm not sure I understand. Have you noticed that buying end of the month into the first of the month hold any advantage? Maybe you're talking about using monthly bars, Frank, for the same approach. Be interesting, but I don't have any experience with that. I don't know if it back tests well. I'm not 100% sure. I can tell you, Frank, that there is a good approach based upon the monthly of trading the SPY, and that is basically at the end of the month, if the SPY is above the 200-day, let's say the month prior it was below, and then the next month it closes above, buying it at the last day of the month if it's over the 200-day, and then just keeping it until at the end of the subsequent months, it's over the 200-day moving average. And then at the end of the month, maybe 4 or 5 months from now, if it closes under the 200-day, that is your exit point. But that's a really good back-tested approach. Actually, I'll show you that in a second. Let me just get through some of the rest of these, and I'll show you that. Oh, good. Steve answered this. Frank, I know there is a historical trend for cash flowing into the markets during the first 1 to 5 days of the month due to mutual flow with the cash retirements. Oh, okay. Thanks, Steve. I didn't know the answer to that question. Steve Burns, my new trader, Rich Trader Part 2, Good Trades, Bad Trades book is free on Amazon Kindle. Oh, nice. Right now, if you want to check it out. Oh, yeah. Go to Amazon and get that. So New Trader, Rich Trader Part 2 is free on Kindle. So go to Amazon and get that. It's a really good book. I like it. Did anyone see Apron 60% move on the news it would start carrying Beyond Meat? I did see that earlier. Look at that, everybody. It was up 60% at one point today. You imagine if you bought that yesterday, you woke up with a 60%er? That'd be awesome. Wow. Had some selling into there, though. Wow, look at that. Greg, would be great if you could have a look at LWAY. Sure thing. All right, let's take a look here. You know, this is a really good example here, Shalin. Hope I'm pronouncing that right. This is a great example, perfect example of a V1 V2 in the value zone. See how we're up here, we're above value, but you see how we come back down into the value zone? And then do you see how beautifully we move sideways, sideways, sideways? You know, I always talk about I want a couple days sideways, but the more days, the better. This is unbelievable. Perfect example. Up, down, sideways movement. It's showing that it doesn't have any strength to want to go back down, 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 down. Do you see how we then spike down? The market decides to break to the downside, decides to test. But then you see how we immediately reverse the next day and create this V2. Here's day 1, here's day 2, day 3. Day 2 closes below day 1, day 3 day 2 goes below day 1, day 3 closes above day 1. So, you know, this was consolidating, price discovery, and then it broke and immediately reversed. This is one of the best examples of like V1, V2. You know, emblaze this in your mind, everybody. Higher high, move back into value, sidewards movement, tries to go down, reverses. The market's telling you it doesn't like these prices back up here. That was your entry point right here. Stop would have been probably a close below halfway of this bar, and this is moving up. We had another V1 today. yeah, I mean, this looks very strong. We're above 57 RSI. Yeah. Shalin, do you have this? Do you have this right now? Yeah, that looks fantastic. I mean, it really, 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 really looks good. Matter of fact, I'm going to write this down because I want to use this as a teaching example. It's fantastic. Thank you for pointing that out to me. Dr. Jorgen says, he who hesitates when trading, i.e. Boeing, usually wins. Yeah, I hesitated. You know, I felt like I was buying something just to buy something, so I decided not to buy it. Johnny, hey bud, how you doing? I have been watching J&J too, but I do not see much upside for the risk. Do you have any gauge for upside you can share? I look at J&J and see 136 to 142, maybe. All right, well, let's take a look. Oops. Well, let's start on the monthly and take a look. We are holding support there at the 20-month moving average. The upside to me on this, Johnny, is, you know, whenever we have big down bars, as a general rule, from a Fibonacci standpoint, we will come back and we will test the halfway of that bar. Not all the time. Look at this big move down here. It came back and was able to move back above 50% of this move. But you can see, I guess it was yesterday, we had this big move down, then we came back and tested the halfway and then failed. You know, I would say probably right now, this second, I would say the 200 is probably your potential profit on this. If we get a bounce, if we get a counter trend move here. But, you know, this concerns me a lot. So I think the first resistance you're going to have here is at the third ATR channel. But most likely, you know, this isn't exactly halfway, but close enough, and you have the 200. If I were long J&J for whatever reason, that is where I would be targeting. And maybe the 50 RSI also. Let's see where the 50 RSI would be. Well, as of tomorrow, up here. So, yeah, somewhere between here and here. But I'm going to say the 200. I think it's going to have some real problems at the 200. Hey, Murat, good to see you. Thanks for coming. Better late than never. Mount Doji said, would like to hear your thoughts on Qualcomm. Well, Qualcomm, we moved higher. We moved back into the value zone, which is good. We did technically have a V2. Here's day one. Day two washes out day one. Day three closes above day one. It did happen within the value zone, which is good. The only thing I don't like is this day one is larger than one ATR. It's about 2 ATRs, and that means that there was a lot of supply. A lot of stock was sold to get it to move more than one ATR. Like a regular move for a day is one ATR, one average true range. So if you move 2 ATRs, that means there was a lot of selling that was coming in. And, you know, if you have a lot of selling up here, you know, makes sense that it's going to be hard to get back above there because that's where people wanted to sell in the first place. But so, you know, on the plus side, we did have this V2. On the plus side, we did close back above the 20-day moving average. That's good. We did close back above the 50 RSI. That's good. So this is about the only thing that, you know, is kind of sticking in my head. But you can see it would have been a good trade so far. It is above 50. So do you have this Mount Doji, or you just taking a look at it? But would I buy here right now? Probably not. And I probably would not have taken this position anyway because of this big bar. But it's a good example of having a move up, moving back down into value. It would have been nicer if we had moved sideways for a while, like that other one I just showed you. But I don't think I would have taken this, but it's the right spirit. It's the right idea of better than buying up here, right? Better to buy in the value zone when you have a trigger at least. Frederick says, yes. Okay. So you did take the V1, no profit. Thanks for the help. Frederick says, I'm going to put the same lime color on yours than yours on my platform. Okay, good. Yeah, that'll make it easier because I literally look at the colors. Frank says, hey, how you doing, Frank? Frank says, hey, Greg, just wondering, do you find that using a bar chart gives you different perspective or insight than if you were to use a candle chart? I don't really look at them much different. There's not a lot of difference between the two. I mean, I started trading 24 years ago with bar charts, so I'm more comfortable with them. But if I change these two candlesticks, I mean, I can still read them. It's just, it doesn't feel normal to me. And, I know with candlesticks, you can see the wicks a little bit easier, but, because I'm obsessed with V1s, V2s and, how something moves off of its high where it closes, I can factor those in anyway. So I think it's whatever you feel most comfortable with, Frank. Mount Doji says, I can't tell if Qualcomm got rejected from the 60 RSI. The 60 RSI, let's take a look again. $59.27, pretty close. But it did reject the 1 ATR, so that's a little telling too. Frederick says, Steve Burns said on a tweet, one mistake in trading is not adding enough cash to my account. My question is, what does he mean by enough cash? Well, I believe that he means having enough capital in the account, Frederick. And trying to trade probably with too little cash. I would imagine. I don't know. I didn't write that tweet, but I imagine that's what he means. Shalin says, yeah, looks great. I'm not in the trade, but wondering if it's too late to enter. My honest opinion there is I don't think it's too late to enter, because we literally had a V1 today as well, and we have a lot of room to get to the first ATR channel. This is probably where you're going to find your first resistance, but we took, I don't think it looks too bad. I don't think it looks too bad at all. You do have room to the upside to move. If I were to enter this trade, where would my stop be? If I wanted to keep it close to 10, if I wanted to give it a little bit more room, the 20, I'd probably use the 20 actually. This does look pretty good, but yeah, if I would have seen this today, I actually might have bought that. Oh, nice. Murat's had this trade. He bought it down here at like 940, if I remember correctly. He bought it, right down here, about 940. Look at this monster today. Good for you, buddy. Man, fantastic. Fantastic. Just make sure you have a plan for that trade, right? Have a plan. An if-then plan. If it does this, I'm going to keep it. If it does that, I'm not going to keep it. So, right now you're looking at a close to a 15% return. So you don't want to give that all back. So, you come up with a plan, but whatever that plan is, stick with it and don't give it all back. Mount Doji's in Qualcomm. All right. Good. Good. I like it. I like it. Like I said, the V1, V2 wasn't great, but, you know, it is moving nicely. It's in the value zone. It's not overbought. It's in the 50s RSIs. Looks good. So I'll watch that and root for you, Mount Doji. RTN caught my eye. Yeah, it's pretty good too. I mean, you know, we broke above the 200. Now we broke above the 1 ATR channel, which is nice. We actually did have a V2 here, higher low V2. Here's day 1, day 2, day 3, day 2 washes out, day 1 closes above 57. Yeah, it's not bad. You know, Kerry Lavorne, who taught me V1s, V2s, he will not buy a V1 or a V2 this high to the channel. He about the maximum he would buy it is here, but it did close above the 1 ATR channel, so that is good, but you don't have it. It's a good point, Johnny. It is a good point. With the volume, you know, that's kind of one of the reasons why I trade large caps. Well, actually, now that I move this up, I do see the volume, so that is good. When I had it down here, I couldn't see the volume, but you see how I increase it. So yeah, I mean, it's confirmed with the volume, so that is good. But generally, that's why I trade large caps, guys, because, you know, you have volume, you have institutional support. When I go to some of these stocks I don't know, these low price stocks, you know, it concerns me because of the bid, the ask spread, and like Johnny astutely pointed out, you know, you have to look at volume because, you know, there's not a lot of liquidity. But just from a price action standpoint, this does look really good. I wouldn't trade it because it's a $3 stock, but you can see here, when I zoom this in, the volume really did pick up today. So that technically is a good sign. Johnny says, and up 5% at the close also looks suspect. Well, technically it looks pretty good, guys. I mean, it checks all the boxes. Down, sideways, spike down, reverse, above the moving averages. You know, MACD's not positive, 57 RSI. But again, it scares me with these low price stocks. But just from a technical standpoint, it looks good to me. Scott Montgomery, traders were elsewhere. Large volume on ACB today. Yeah, there is a lot of volume. I mean, this is a good example here, guys, that, you know, yesterday we created a V1. It was too big of a bar, so it doesn't make it a really good V1, but it is a V1. And it did go under the 30 RSI, over the 30 RSI, went under the channel, over the channel. So I'm not surprised to see this move up here, but I wouldn't buy it here because now we're at a 41 RSI, right? A 50 RSI is going to put us about right here, and I feel like it's going to have some resistance here if it gets here. I don't know if it's going to, but theoretically, you know, it's going to have some resistance at the 50 RSI. So, you know, we're at a 41 RSI. If your stop was a close back below the 30, you have 9 points to the upside and 11 points to the downside. So the risk to reward right here is not so great. It would have been better yesterday. Mount Doji, I got the free trial of stockcharts.com. Oh, good. Good. Let me know how that goes, Mount Doji. I you know, with some of my clients, I'd like to get your opinion on how you like it so that, you know, maybe I can refer it to my other clients. It is good. I know that's what Steve uses. It's just the getting used to it and how to set up your charts and all that kind of stuff. Greg, do you also look the fundamentals to take a stock into your watch list? You know, in a way I do. not 100%, but in my watch list, I do have monster stocks in there, Google and Amazon and Apple. So just kind of by default, I know they're big, strong, profitable companies, and that's one of the reasons why most of the stocks in my watch list are big, major companies, because just kind of inherently they have good fundamentals to be those big type of companies. So, but the best trades you can have are on stocks that have good technicals and also have good earnings, right? Because at the end of the day, fundamentals do matter. They may not matter in between earnings and things like that, but at the end of the day, stock prices are always a slave to earnings. Merritt says, I'm using TradingView and very happy with it. Oh, good. I've heard of that before. I like that I have more indicators, a cleaner look with stock charts. Still going to learn more stuff. Today is only day one. Okay, good. All right. So we did have a bit of a down day today. Not too bad, but it was the Etsy that got us. But that's how it goes. But let's be grateful that we had some up on AGQ and IWM. SPY was basically break even, and then Verizon was down just a little bit. So, all right, guys. Well, I'm going to put on my hiking boots, go up into the mountains, and hike around. It's super hot out here, but so I'm going to have a hot hike. I have some lessons with clients tonight, so I hope I can help them out with that. But thanks everybody for coming. It's so great to have all the regulars, and I appreciate your questions, and I hope this is helping, guys. And if you have additional questions that you didn't think of today, feel free to send me an email on Twitter, an email which is in my description, or on Twitter. Thanks, Frederick. Hope you have a good bike ride if you head out later. Hey, you're welcome, Johnny. So thank you, Johnny. Merritt T, appreciate it. Frederick, Mount Doji, Scott Montgomery, thank you. Steve Burns, JT, always good to see you, my friend. Thanks for stopping by. Shalin, thank you for coming by. I think this was your first time. I hope you come back. Let's see. Dr. Jorgensen, thank you, my friend. Steve Burns. Guys, go and get that free book on Kindle today. Rich Trader, New Trader, Rich Trader Part 2. It's a really good book. And it's interesting reading about trading stocks, not from a stock book or a stock trading book, but in a narrative form, in a fiction form. It's pretty interesting. It's about an experienced trader that starts working with an inexperienced trader and all the issues that he goes through. It's really good. Seriously, it's freaking free. So go and get it. But thank you, Steve. Really appreciate it. And thanks for posting that great Twitter post with Warren Buffett there one. Frank, thank you for coming by. Oh, Frank, I forgot. I almost forgot. Let me show you real quick. And I don't think this is actually what you were asking about, but I do want to show you. This is a very simple long-term approach on the SPY. And for those of you that can't stick around and look at the charts every day, if your schedule doesn't allow it, this is a trade. Literally, the maximum you'll trade is once per month. So here's the key: you look at the S&P at the end of the month. If the price is under the S&P at the end of the month, you don't do anything. Then you look at it 30 days later. If it's above the 200-day moving average, you buy it. Then you don't do anything. You look at the end of that month. Is it still above the 200-day? You keep it. The next month, is it still over the 200-day? You keep it. The next month, if it's closing under the 200-day on the last day of the month, you get out of it. You stay out of it. You look at it again the next month. So it's so great. You only have to look at your charts once a month. But let me show you this, right? So basically, S&P simple month end. So at the end of the month, if it's above you stay in. If it's below, you get out. Look at these results. 381.6% compared to buy and hold only 215.4. The maximum drawdown with this approach, the month-end approach, is only 20.8%. The maximum drawdown of buy and hold 55.2%. So it outperforms both on the return, 381.6 compared to 215.4, and the drawdown only 20.8 compared to 55.2. So, people ask me, hey, I want to be a little bit more active in the market, but I don't want to look all the time. This is what I would suggest. So I hope that helps, Frank, if you're still there. But thank you for coming by. And did I miss anybody? I'm sorry if I did. Chris F., good seeing you. Thanks for coming by. William, thank you for coming by. And Andy. So, all right. Well, listen, that's about it. I hope we see everybody tomorrow during the last hour of the market. Go out, do something nice for somebody today. Just give them a smile or a wave, or just be polite. That's like a big thing these days, is just being polite. But, it might help somebody's day. It's going to help your day as well. So, all right. Well, I'm going to call it for the day. And thank you for coming by, and see you tomorrow. Last hour of the market. Take care, everybody. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor, or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast, or their clients, may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading, and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.